Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Oscar Health Inc. Annual Report. Oscar Health Inc. offers a range of businesses and services that cater to various segments of the healthcare industry. At its core, the company provides health plans to individuals, families, employees, and small group markets. This indicates that Oscar Health is a major player in the individual and group health insurance market. In addition to offering health plans, the company also provides technology solutions through its Plus Oscar platform. This platform powers other healthcare-related businesses, suggesting that Oscar Health has expanded its reach beyond traditional health insurance. Furthermore, the company offers two specialized platforms: Campaign Builder, which is an engagement and recommendation tool for providers and payers, and reinsurance products. Overall, Oscar Health's diverse range of services indicates a commitment to innovation and expansion in the healthcare technology space. By offering both health plans and technology solutions, the company has established itself as a significant player in the industry. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to drop. The stock price of Oscar Health, Inc. has dropped significantly over the past year due to various reasons. One major factor is the company's financial struggles. Despite its initial success in expanding its health insurance offerings, Oscar Health has faced significant losses in recent years. The company's operating expenses have increased substantially, putting pressure on its bottom line. Another reason for the decline in stock price is the uncertainty surrounding the Affordable Care Act, ACA. As a major player in the individual and family market, Oscar Health relies heavily on ACA enrollment to drive revenue. However, the ongoing debate over the future of the ACA has created uncertainty among investors, leading to a decline in confidence in the company's prospects. Additionally, the rise of new competitors in the health insurance market has also contributed to Oscar Health's declining stock price. With more players entering the market, competition for customers and market share has increased, making it challenging for Oscar Health to maintain its market position. Lastly, regulatory challenges have also affected Oscar Health's stock price. The company has faced scrutiny from regulators over issues such as data security and compliance with industry regulations. These concerns have led to a decline in investor confidence, further contributing to the drop in stock price. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be identified through an analysis of its annual and quarterly reports. In this case, the key drivers of revenue growth are primarily attributed to an increase in direct policy premiums and subsidies received from CMS as part of the APTC program. Direct policy premiums have shown significant growth over the past 2 years, with a 37% increase from $6,418,872,000 in 2023 to $10,292,125,000 in 2024. This trend continued into 2025, with direct policy premiums reaching $14,031,308,000, representing a 27% increase from the previous year. In contrast, assumed premiums have shown a decline over the past 2 years, decreasing by 79% from $228,786,000 in 2023 to $46,568,000 in 2025. Similarly, risk adjustment transfers have also decreased, with a net decrease of $2,596,833,000 in 2025 compared to -$1,526,448,000 in 2024. The increase in direct policy premiums and subsidies from CMS are the primary drivers of revenue growth for the company. These factors have contributed to a significant increase in total revenue, with a 27% increase from $9,177,564,000 in 2024 to $11,701,427,000 in 2025. Net income and profit margins experienced a decline between 2024 and 2025. Net income decreased by $468 million, with an estimated loss of $48 million due to legal proceedings in 2025. The medical loss ratio, MLR, increased from 81.7% to 87.4% indicating a decrease in profit margins. The reasons for this decline are multifaceted. Potential negative impacts from Kaiser's suppression order and uncertainty around the Medicaid redetermination process negatively affected net income. Additionally, increased morbidity among health insurance marketplace members enrolled through Medicaid may have also contributed to decreased profit margins. Other factors that influenced net income include acquisition-related risks and costs in 2025, which further reduced net income. On the other hand, enhanced advanced premium tax credits, EAPTCS, from 2021-2025 had a positive impact on net income, but this may not be sustainable if EAPTCs are not renewed in 2026. In summary, the decline in net income and profit margins can be attributed to various factors, including potential negative impacts from regulatory changes, increased morbidity among health insurance marketplace members, and acquisition-related risks. The company's financial performance has been a notable aspect of its overall success. One key indicator of this is the generation of positive operating cash flow. According to the provided information, the company has consistently demonstrated this trend over the past few years. In 2025, the net cash provided by operating activities reached $1,094.9 million, indicating a significant influx of funds into the business. Furthermore, operating cash flow was also positive in both 2024 and the preceding years. This consistent pattern suggests that the company's operations are generating sufficient cash to cover its expenses and investments. The data confirms that the company has generated positive operating cash flow in all 3 years, demonstrating a stable financial foundation. This is a crucial aspect of any business, as it enables companies to invest in growth initiatives, pay off debts, and maintain a healthy cash reserve. Overall, the company's ability to generate positive operating cash flow is a testament to its financial health and resilience. The company's debt level has undergone significant changes over the past year. Initially, it increased by $475 million with a secured 3-year revolving credit facility on February 6, 2026, page 78. However, this was preceded by an exchange of $250 million of existing debt for Class A common stock in November 2025, page 77, which reduced the company's debt level. Furthermore, the principal amount of 2030 notes decreased, and the net carrying amount increased, resulting in a possible increase in interest expenses, page 103. Additionally, long-term debt increased from $299.6 million in 2024 to $430.1 million in 2025, page 85, while total liabilities rose from $3.824 billion in 2024 to $5.345 billion in 2025, page 87. In terms of interest expenses, the company has experienced a significant decrease over the past year. Interest expense as a percentage of total revenue decreased from 0.26% in 2024 to 0.15% in 2025, page 85. Moreover, interest expenses decreased by -62% from 2024 to 2025, page 89, and by $6,098,000 from 2024 to 2025, page 119. This reduction in interest expenses is a positive trend for the company. Management's outlook for the company is centered around adapting to changing regulatory and legislative environments in the health insurance market. They anticipate a potential contraction in the market, which could negatively impact morbidity, but are focused on managing risk through reinsurance agreements and capital efficiency. The company's business is subject to seasonal patterns, with fluctuations in member enrollment, medical expenses, and product design affecting their operations. Management has implemented a disciplined approach to investments, including restrictions on selling securities at a loss, and expects cash flows from operating activities to vary due to timing of payments and receipts. In terms of capital deployment, the company is efficiently allocating funds through quota share reinsurance arrangements to support growth. The recent shift in financing strategy, with the termination of the 2021 revolving credit facility and entry into a new secured revolving credit facility, indicates a proactive approach to managing debt and financing. Overall, management's focus on risk management, capital deployment, and adapting to changing market conditions positions the company for long-term success despite potential challenges. The company has made several significant transactions through its acquisitions and divestitures. In terms of acquisitions, the company has purchased Lucy, Inc., IHC Specialty Benefits, Inc., Healthinsurance.org, LLC, and entered into a reinsurance arrangement with Cigna plus Oscar for its small group plan offering. These acquisitions are expected to bring in new business opportunities and expand the company's services. On the other hand, the company has also made some divestitures. One notable example is the exchange agreement with Dragoneer, where $250 million of 2031 notes were exchanged for approximately 30.1 million shares of Class A common stock. Additionally, the company issued approximately 2.4 million shares of Class A common stock to settle conversion notices from initial purchasers. Furthermore, the Cigna plus Oscar small group arrangement was not renewed after December 31, 2024, marking another divestiture for the company. The company's financial history reveals a commitment to rewarding its shareholders through dividend payments. According to the provided information, it is clear that the company has indeed paid dividends. This is explicitly stated on page 38 of the document, where it simply reads, dividends, yes. Furthermore, page 113 provides additional confirmation by stating that common stockholders are entitled to receive dividends. That concludes the financial summary for Oscar Health Inc. Feel free to comment below, and I will be happy to answer them when possible.